All right. Good morning, everybody. Welcome back to another Market Open. It is November 3rd, 2023. It is 8:55 a.m. We are starting a little late this morning because I had to finish up a couple of things, but we are here. It is time to discuss and open the market. And this is one of those market opens where you get to talk about an earnings that happened. And earnings that a lot of us really wanted to, care about. And that earnings is Palantir. We will be discussing Palantir earnings today. I'll have a separate video coming out later this Friday, which is today, discussing more in depth what happened with Palantir. And so that video will come out a little bit later today, and we will discuss all things Palantir. But Palantir had earnings yesterday. Apple had earnings yesterday. We've got to talk about that. This Friday is going to be very interesting because a lot of the time when the market does incredibly well throughout the entire week, it is usually a sign that there's a sell-off on Friday, simply because people don't want to hold their stocks overnight and hold their stocks throughout the end of the weekend, just given any news that may happen on a Friday or Saturday. But overall, I mean, whatever happens to the market, and it is what it is. We got to talk about earnings. We got to talk about Palantir. We got to talk about the trajectory this company's on, because after analyzing it and spending a day with those earnings, it really was not a bad earnings. And it's so funny because you see Apple kind of struggling, right? And Apple's like Apple, right? So they're big. They're going to struggle to keep growing. And then you see Palantir kind of thriving, even though their Palantir is not, doing the best in terms of all the companies out there. But it's funny just to see one company potentially on the decline, another company potentially on the come up. And that is the circle of life in the stock market, right? Some companies have to start doing worse. Other companies start doing better. And as an investor, you get to sort of allocate where your resources go because of that. So we got a lot to talk about. We got to talk about job reports. We got a ton to discuss. Roy, Arjun, Miami, Ren, SP Narwhal, Broccoli Bob, Philip, Rizzo, Lars, Irwin, Paul, Goggin, Bay Ray, Monty, Joseph Villegas, Long, Langaftan. Good morning from Western Australia. Thank you so much for being here. Johnny X just announced XAI. Okay, so I guess we have to talk about XAI and whatever XAI is. Chris wasn't impressed. Yeah, Chris wasn't impressed, even though I think Chris did realize that he has to buy back in now at a higher price if he did want to buy back in. His buy-in was $8. Now it turned into $12. So he's going to wait $4 more to get back in if he ever comes back in. Lord Blumu, Marwin, Tashi, Roosevelt Jefferson, Kanki Gonzalez. Kanki that's an interesting name. Monty, Technotrans, Silver Fox, Beto88, Joseph Farrell. Some of you guys have the most interesting usernames, like absolutely unique usernames. Like we got a guy named Johnny Mac, and then we have a guy named Broccoli Bob. And that's why I love saying the names in the chat, because you just get so many different unique people here. All right, so let's do that. Let's discuss Palantir earnings real quick. I just want to pull up the market and see what we're looking at here in the pre. Palantir is $17.93 in the pre-market, still up 20% from yesterday. TFC had a pretty good day. For those that know, I have a position in TFC, and TFC is at $30.80 right now, up 2.77%. In the pre-markets, Robinhood's at $9.62, up 1.48% in the pre-markets. You would think Friday is a little bit more of going to be a tough day, but as I'm looking at the pre-market, everything is green. Google, $129 in the pre-markets. Netflix is at $427 in the pre-markets. Square is up 17%, $51 in the pre-markets. Coinbase is down a little bit at $83. But JP Morgan is up, Arc Innovation is up, Western Alliance is up, PacWest, all the regionals are up. Roku had a great earnings, $79 right now, up 1.5%. They were up 20% 2 days ago. PayPal, of course, it's down in the pre-market. Tesla is up in the pre-market, 222. SoFi is at 831, up 1.71%. I don't know how this market is becoming incredibly excited, but at the end of the day, the market is getting excited, and we are getting a lot more momentum, and we're seeing a lot more green. So let's discuss Palantir. I want to see that jobs report as well. That jobs report is probably a reason for why we're up right now. Yep. This is why U.S. payrolls increased by 150,000 in October, less than expected. Okay, so we'll talk Palantir, then we'll talk more macro, and then we'll do more job stuff. Okay, So let's do Palantir. Again, I'll have a video coming out on this later today, going more in depth, but this was one of the best earnings I've ever seen from this company. Why was this one of the best earnings I've ever seen from this company? I believe Palantir has figured out the thing that was holding them back for so long, which was their go-to-market strategy. Go-to-market strategy in the context of business is how do we come up with a way to put our software, our product, whatever it may be, in front of people. It is very tough to come up with a go-to-market strategy. It is not an easy thing to do. And there's a go-to-market strategy in every sector of business, right? So YouTube, I have a go-to-market strategy. I make a video. I do this live stream. There's a way to market it. I can tweet the live stream so more people have access to see it. I can work with the algorithm. There's a way I decide how I take my product, which is this live stream or my YouTube video, and I go to the markets being, the general audience, the general masses, and say, hey, here's how you guys can interact with this product. Palantir, for the better half of 2 years, I don't think they figured out what that go-to-market strategy was. And that was really concerning for us as investors because it was like, look, you guys have an amazing product. We know you have the technology to be able to execute on this stuff. But if you can't sell it, like it really doesn't matter how good your technology is because your technology doesn't really change anything, right? Like your technology has to ultimately have an impact. And to have an impact, you have to get in front of people. Well, they figured out that if they can do boot camps, which we'll talk more about in the future, but boot camps are essentially creating an environment for potential clients to use proprietary data, work on that data, train their own models on that data, and then have a work of concept, like a legitimate product they can start using and use for free if they wanted after 8 hours of a boot camp. They have a better chance of converting that person into a client. And as a result of that, that's what they figured out. And they figured it out in a way that's starting to scale. And we're seeing it in the numbers. So if we, as you can see right here on these boot camps, you go from 0 to use cases in 5 days or less. We're on track to conduct AIP boot camps for more than 140 organizations by the end of November. I mean, like, that's not a joke to have 140 organizations in 1 month to be able to showcase the products and features that you have for them. That's a really good deal. And as a result of that, I think the market is also rewarding them for that. And again, here's one of the quotes from these boot camps. I approach this engagement very critically. It's hard for someone to come in and build a product in one day, especially when they had been working with us and other entities for months and hadn't seen results. We worked with Palantir and got the results that we wanted in less than 8 hours. That was a data scientist. These guys are more hard-headed than normal, right? Because honestly, they're very arrogant and they think highly of themselves. So when another company's like, hey, we can help you build something, they're like, no, you can't. And then in 8 hours for Elliott Smith to be like, actually, we're going to present this to our CEO because it's really good. Palantir's probably going to get a deal with them. I mean, right? Like you're just going to get a conversion off that in a much better way. And I think that's why it's important. Here's some of the numbers: 37% year-over-year U.S. customer count growth, 12% quarter-over-quarter U.S. customer count growth, 33% U.S. commercial revenue, which is really important. They're going 17% revenue year-over-year, 33% U.S. commercial. If U.S. commercial keeps growing the way it's growing, then that will inevitably make that 17% turn into 20, 25. And who knows? Carp said we would do 30% year-over-year CAGR till 2030. You never know. We still got a couple years left. We might end up CAGRing 2030. Like we might end up CAGRing by 2025, 30%. We still have 2 years left. We ought to put up some pretty big numbers in 2024, 2025. But if we do, I think 20% growth rate we were at CAGR might end up being 30%. 102 U.S. commercial deals closed, 65% quarter over quarter U.S. commercial deals closed, and 10x 3-year U.S. commercial customer count as well. So GAAP profitability, this was a big idea, right? $72 million. We are increasing GAAP profits by 3 cents a share versus 1 cent a share for the previous 2 quarters. That big spike from 28 to 71 million. That's also because we landed a $40 million contract, total contract value TCV, with one of the largest home builders in the United States. That actually makes sense in the context of the macro because we're seeing a lot of home builders make a lot more housing because we have a supply issue, right? And that we need more supply of housing to decrease the prices. And Palantir signed a contract for $40 million with one of these guys just in Q3. So one could argue that the entire 40 million bump came from just like one contract that they were able to sign. So this is really important. Government revenue growth grew 10% year over year. Commercial revenue growth grew 33%. This is the big one, right? Last year, they did 88 million at this time of commercial revenue. Now they're doing 116 million, which is absolutely phenomenal. And then the other number I wanted to show that was important, which was 80% software margins. That's fine. Here we go. Adjusted operating income margin. This number has not been as high as it's been in a while. Okay, us being able to have an adjusted operating income margin of 29%. Even Mariana from Bank of America was incredibly impressed by this because it just showed that we were being more fiscally responsible with our costs, and we were also being able to pull up the things that we needed to pull up in regards to getting more deals to showcase that, hey, we're not messing around. Like, we are real, and we want to be able to, win pretty hard. Aaron says, had a convo with IT guy yesterday, works in Boulder and absolutely hated Palantir, says it's the most unethical company and refused to work there. Came down to use cases with ICE. I was working. So yeah, I mean, look, you're going to have some people that have their own ideological disagreements about it as well. And it is what it is. But these numbers were just amazing. And then this is the last one I want to talk about. Commercial customer count was really important. So even though customer count stayed the same, 8% quarter over quarter, like we saw last quarter, it definitely didn't deaccelerate, which is good, right? So it stayed the same, 34% year over year. Commercial customer count is 45% year over year. So as you can see, this one went up. It was 8%, and then it went to 9% last quarter. So we added 28 new commercial customers and about 3 new government customers overall. And again, that's what matters. The government business is what's going to keep us afloat and keep us steady and keep us going. But that commercial customer count is going to put us in a new era in terms of being able to scale this to the moon, right? You got to get commercials to be able to win. And that's why it's really, really important for us to be able to get there. Now, I want to share what the street thought about it. Okay. So the street had some unique thoughts. Most of the street was really excited about what happened. Don Juan says, did you see anything in earnings that signals to you Palantir breaks 20? 1000% Palantir could break 20. If the market keeps rallying, I mean, what I'm looking at in the pre-market, the market absolutely could give Palantir a $20 target. I don't know if they would sustain that, just like in the summer. But what I do know is that if they get a $20 target, or if they get a $20 price range, it wouldn't be like crazy. Like in July, it was crazy. It didn't make any sense, right? Because we went from 9 to 12 to 13 to 14 to 15 to 16. Like, if you guys remember, every single day we just went up $1, and that was like, you probably didn't, it wasn't warranted. Now, we were up 20%. So this is another thing. If you're a Palantir shareholder, on the days that are good, we will go up because the level of retail momentum behind the stock, similar to Tesla, even on a day where the earnings wasn't that amazing, like the earnings wasn't amazing yesterday. It was really good, but it wasn't like, oh my God, they're growing like 50% or something crazy. You're still going to get a crazy spike because the retail momentum and the enthusiasm of Palantir is still there. Okay. And so like, that's why people will get excited. When we actually do well, then you could only imagine what's going to happen. Now, having said that, could that, boost it up to 20? Yes. Is that going to stay at 20? Probably not. But is it possible to get there? Yeah. And then it's just a question of, who takes their profits there. So Wedbush reiterated their $25 price target. Dan Ives said, with another stepping stone placed on the golden path, the company remains well positioned to capitalize on strong commercial AI spending tailwinds heading into 2024. The Messier of AI delivered in massive AI monetization on commercial now on the doorstep. So so I was going to say Messi is excited. Dan Ives of Wedbush is still excited that the Messier of AI is continuing to become the Messier of AI, which is Palantir. Also, Erwin, if you type in ICE Palantir Emit on YouTube, I did a 20-minute video on them like back in 2022, where I broke down why they worked with ICE and like how to like, I guess, sleep at night with them working at ICE, right? How to understand from an ethical perspective. So if anyone wants to know that, if you type in ICE Palantir Emit, you'll probably find that video from a while ago, and you can watch that later. Bank of America, Mariana, she maintained her $18 price target. She said it's a buy. Wolf research analyst Alex Zukin raised the price target to $11 from $8, which is actually pretty significant to go from 8 to 11 for some of these analysts that are really not only bearish, but just like skeptical of Palantir. Like, if you're getting the skeptics to get excited about Palantir, then I think we're not doing the worst job. D.A. Davidson analyst Jill Luria raised the price target from 18 from 15. That's not bad, right? That's the same as Bank of America. Goldman Sachs raised it from 11 to 12. This is also not bad. She said, we are impressed by the level of reacceleration in the U.S. commercial business and the strategic decision to recenter the GTM around AIP boot camps. Again, it seems like they really do like that new strategy, which appeared to be contributing to deals faster than we initially anticipated. With that said, we continue to see better risk reward in other names in our coverage and look to gauge the sustainability of growth driven by AIP. And that I can reconcile with, right? There could be better risk reward in other names, even though, big tech seems kind of expensive right now as well. But I could deal with someone saying that. However, if the sustainability of growth driven by AIP is truly sustainable, then I think this could be one of the better risk reward opportunities that exist in the market. And I think that's important to understand. And then you got Tyler Radke, this interesting fellow who has hated Palantir for a long time, reiterated a sell rating on and a $10 target. So here was his reason to be bearish. Palantir delivered a mixed Q3 results with revenue largely in line with expectations and upside driven by SPACs. The revenue mix was more tilted towards commercial versus government. Commercial revenue was solid, be accelerating 34% year over year ex SPACs, led by U.S. commercial growth of 36% year over year. While the company called out a large $40 million TCV contract with a construction organization, leading indicators are weaker with both billings decelerated to just 8% and CRPO bookings deaccelerated to 9%. That's like how much revenue you're allowed to be able to show. Profitability was again better with OPEX expected to grow at a slower pace than revenue. Q4 guidance was in line and better than feared. Though the quarter could have been worse, we'd be sellers of the positive reaction as a largely inline print on revenue with a softer bookings doesn't seem to justify a 20% move. Look, his last sentence is honestly correct. That quarter probably didn't justify a 20% move to the upside. However, this is why we invest in Palantir. Because you're never going to have a company that's properly valued. You're never going to have a company that's valued at, the fair market multiple valuation. You're going to have a company that's kind of overvalued. You're going to have a company that's 50 million shares trade hands within like a couple of hours on earnings because there's that much excitement about this company. And so the idea that he said we'd be sellers of the positive reaction, yeah, you could sell it off, but nothing in that earnings call gave me a reason to say, hey, we should sell. And by the way, CFRA upgraded to hold from sell with a $20 price target. They again think boot camps are not as bad as well. So they're upgrading to hold. So instead of selling it, now you hold $20 price target, and they're saying boot camps are good, and that's giving them traction. Nothing in that earnings call gave me a reason to think, oh, we should sell the stock, quite frankly. And so could you sell it? Yes. But this is the reason why you're in one of these companies. It's like when it runs this much, you kind of don't sell. You kind of just let it run. And then when it really runs to like ridiculous price targets, that's when you take them off the table. But you're in a generational company to be in a generational company. It's kind of like Bitcoin, right? It's that one thing. There's 21 million of them. If you got one of them out of the 21 million, then you hold it. You just let that sucker go and see where it ends up, because it just might end up on the moon and it might meet Palantir there as well. And so nothing in this earnings call to me was a reason to ever get afraid of selling it. But it was great. It was a great earnings. I will have a video coming out later today. It'll be my first Palantir Daily episode in like a week. I've missed a week because of Vegas and everything, so I'm excited to get that video out there. But in that video, I will discuss everything even more in depth about what I feel. The other thing is Karp. I just want to play one clip of him, and then we're going to get to the rest of the stuff going on in the macro. We have 18 minutes until the market opens. Karp sounded the most confident I have ever seen him sound in a long time. I mean, just his ability to be like, look, this is what we're doing and you can't compete with us. And like, it is what it is. We're going to win. It was just awesome to see. So this is Karp talking for a little bit, and then we'll move on to macro.
It's not just that we win clients. It's that we set a standard that the competition can never meet. And that this is really important for our go-to-market strategy. It's like you can pretend you're going to build PG. The French government announces they're going to rebuild it for $40 million. You can't rebuild PG for $40 million. You can't rebuild it for $1 billion. You need us. You can't rebuild Foundry. You can't rebuild Milan. When we go to market with AIP, the clients are learning two things. They're learning, oh, I could use this. They're learning how to use it. They're also now going to go to every other vendor and say, but I want my thing to provide operational results. And Palantir has done this in 6 hours. I like you better. I'll give you 6 days. I prefer you. Your steak dinner is better. Your suit is better. Your backing from the analyst is better. You don't have the madman sticking up for things that are good and right in the world, despite them being unpopular. And you get all that. I'll give you an extra 10 days. Well, try that with PG. It's ridiculous. Try it with Foundry. It's ridiculous. Try it with Meta Constellation. No one even bothers trying that. No one tries this on Gaia, and they're not going to try it on AIP either. And that's one of the most important things we do as a company.
So, I mean, when you see someone talk like that and say, look, the French government, you want to try to create it, go ahead. You can't compete with us. We're building something that is just, it is one of a kind. And again, remember, I think for all the people here that invested in Palantir, we invested in Palantir for this core reason, which was like, look, we don't know how they're going to sell it. We don't know how they're going to go to market. We know they don't have the biggest sales force, but damn it, this guy, his vision, his 20 years of experience. They named a product after a philosophical term called ontology. Like you learn about what ontology is in Philosophy 101 in college, and they named an entire product around how you structure your data and ontology. And they're eccentric, they're eclectic, they are product driven at the very core. They will figure out how to get this into the market. That was the hope. That was the assumption. That was the risk. And I don't think we've solved that risk yet. I don't think we're on the other side of it, but it looks like we're getting to that level. And that's what's really, really exciting about investing in Palantir. And that's why I think they just had a phenomenal earning. Like, I cannot be more happier than that earnings. This team in this macro environment did what the hell they had to do. And that's why we're seeing some momentum with Palantir. Okay, let's move on to what's going on in the macro, because we've got a market that is really benefiting from a variety of things. And I want to break it down and explain why the market is benefiting. First, let me just give a quick shout out to all of you guys. Thank you for 25,000 subscribers. We hit it last night. Big milestone, 25K. Been doing this for 2 years. So really, really appreciate everyone who subscribes and shows up, especially to the morning open stream every single day. I mean, you guys already know how grateful I am, but I can't express how grateful I am every single day. So thank you guys for the 25,000. And yeah, let's just keep it going. Let's do what we got to do. US 10-year Treasury. It is falling off of a cliff, 4.519%. This right here is another reason for why equities are going higher. Again, for those that don't know what the US 10-year Treasury is, it is one of the core bonds that people can buy outside of 30-year, 2-year, 5-year, etc. And they can get 4.5% by the US government on average every single year, fixed. So if you put 100,000, you get 4,500 back. A couple of weeks ago, really last week, it was 4,900. And the week before that, it was 5,000, right? It was 5%. So you could put 100 grand, get 5,000 back. When you're getting 5,000 back off 100 grand and the S&P on average does 8 grand in return, right? 8% versus 5%, that extra 3% of delta is not worth it. And what's happening right now is it's falling down. And if it's falling down, that means people are buying bonds. Again, when that yield goes up, it means people are selling off bonds, which is not good because people don't trust in the US government. They don't trust in their debt. They don't want to own US debt, etc. However, whose debt would you rather want to own? You want to own China's debt? You want to own Iran's debt? No, you want to own the United States government's debt because we're the best economy and government in the world. Even though we have all of our issues, our debt is the most secure in the world. So if you buy our debt, those yields start to come down because if there's a lot of people buying it, there's no reason to incentivize them to try to buy and have yields go higher. But, well, here's the thing. If people are buying all those bonds, then that means that there's not as much of an attractive yield you can be getting for the US 10-year. Remember, in 2020, this yield was like 1%, right? So it is higher than it is in 2020, but it's not as attractive as it was a couple of weeks ago, which means equities become more attractive. And that right there is one of the major reasons for why equities are going up right now. More liquidity is entering into the market because now people are saying, hey, can I get more than 4.5%? 4.5% doesn't sound as fun. You see Palantir go up 20% in a freaking day. Maybe I should be investing my money towards some of these growth companies that really are doing something different in the world than a US 10-year Treasury. And as a result of that, you're getting these yields to come down in a much more aggressive manner, which leads to that money trickling, which is not a word, but I made it into a word, into the equity markets. On top of that, one last thing I'll say here. Remember, there was $5.5 trillion on the sidelines as per September's latest data that was waiting to enter into equity markets. A lot of that money, I would argue, is still on the sideline. I would, maybe 5 trillion, maybe 5.25 trillion is there, and 250 billion came into the equity markets. We have not even started the transition from money market funds and treasuries into equities. Like, that hasn't happened yet. And I don't know if that's going to happen end of year. I don't know if that happens 2024, but if that does happen, this market has a lot more, momentum baked into it. It's just a question of when that will happen. And again, the reason that would happen, it's very important to remember this. The reason that money would come into equities is because inflation is coming down, which is what we're seeing. Jerome Powell isn't raising rates, which is what we saw at the FOMC meeting, right? We paused rates. And in general, people are realizing that we should be in a little bit more of a risk-on mode and get a return from equities versus just be stuck in U.S. debt. This was another big report that came out today. U.S. payrolls increased by 150,000 in October. We added 150,000 jobs. However, this is less than expected, which is a good thing. It is good that we had less jobs than expected because you don't want a hot economy right now where unemployment it's the lowest it's been in a long time, and Jerome Powell is trying to get inflation to come down. So it's actually in line. We needed less jobs than expected. Non-farm payrolls increased 150,000 for the month. The Dow Jones estimate was 170,000. which means you got 20,000 less jobs. Again, it's not like you want to see 20,000 less jobs, but you do want to see a little bit less momentum. It's like that Goldilocks zone of how can we get a lot, but not as much to be able to make the market less excited about inflation because there's not that much money going in, and more excited about equities because inflation is going to have to come down as a result of this. The United Auto Workers strikes were primarily responsible for the gap, as the impasse meant a net loss of jobs for the manufacturing industry. That's really interesting. So in September, we added 297,000 jobs. In October, we added 150,000. At least this article is saying that the UAW is the reason for why we lost those jobs. If that's the case, Ford, Stellantis, and GM have strike tentative deals with the UAW. So maybe we see those 20,000 show up in November. That might actually be a thing. But in general, at least for now, those jobs not being factored into the economy is something that the market tends to like. Unemployment rate rose to 3.9%. We are very close to 4.1, which is what I believe what Jerome's target was, against expectations that would hold steady at 3.8. Employment is measured in a household survey, which is used to compute the unemployment rate, showed a decline of 348,000 workers, while the rolls of unemployed rose by 146,000. So 146,000 more people filed for unemployment. 348,000 through surveys show that they don't have a job. In addition to October, the Bureau of Labor Statistics revised lower its estimates of the previous 2 months. September's new total is 297. Oh, wow. So September's 297 from 336 because we go back and we revise. And August came in at 165 from 227. Wow. So the original revision, this is another reason I think the market's up. We basically lost 101,000 jobs that we thought we got. And that's actually really, really important. Because if there's 100,000 less jobs in the economy, then for the past 2 months, the market kind of factoring in all that money is getting in and it's going to affect inflation. It's not coming in, which means when we get the inflation number in the next, 10 days, we get CPI. That might actually have somewhat of an impact. So that's not too bad at all. I want to check the price of oil as well. Let's check oil prices today. Oh, wow. Look at that. Look at that. Oil is at $82, at least WTI crude. That's also really good. You got a lot of macro factors coming in well. So you've got the 10-year going from 4.9 to 4.5 in the past week, really in the past couple of days, which is a digressive decline. You've got us taking off 101,000 jobs from the market that we thought we did have. Came in lower in the jobs report than expected, which means less money flowing into the economy, which means more of a chance that inflation starts to come down, which again is the single biggest concern for the Fed when it comes to lowering interest rates. We got interest rates actually paused. So Jerome Powell was like, even though it was a hawkish pause, I didn't get to listen to all of it, but he sounded like, from what I heard, he sounded pretty like he was trying to not let the markets rally. But at the end of the day, if you're going to pause, you're going to pause, right? The markets are going to be a little bit more excited than normal about that. And now you've got oil at $82, which is not bad. I don't know if you guys are seeing it, but I'm seeing oil prices start to come down a lot more as well. So that is not bad. That is not bad at all. And that's why we're seeing a bigger understanding of why these markets are up. When is the next Junkie Con? We'll have to figure it out. Maybe we do Vegas again, or maybe we do somewhere else, but probably 2024. We got to do these at least once every year. Let me bring up our girl. We haven't heard from her in a long time. You guys know who I'm talking about. The OGs. The OGs will know exactly who I'm talking about. Gabriela has some words to say about interest rates, where the market's going. And she was, a couple months ago, I got to give her credit. She's the one who said this is going to happen. And we're bullish on equities if this happens. Here's what she has to say today.
Asset management. Welcome back. It's nice to see you.
Nice to see you.
Are the markets getting this right? Did they get what the Fed chair said correct?
I think so. I think what the Fed chair officially communicated was that they're still in a hawkish state of mind. But I do think the market is right to interpret several dovish signals that he sent as a sign to reduce expectations for another rate hike and to increase on the probability that the Fed is really done raising rates.
You think they're done?
We hope they're done, and we do think the odds have risen since yesterday that they're done. And that's because of several things he said. Chair Powell mentioned third quarter's very, very elevated growth, but mentioned that forecasts are for that growth to slow down. Mm-hmm. He also cited several improvements in the supply side of the economy, be it the jobs market, be it productivity that we got this morning. That means that resilient growth doesn't have to mean inflation pressure. And then lastly, he cited risks, including the tightening of financial conditions. So we do think he could have pushed back against expectations for no more hikes.
He didn't.
It didn't really happen.
Right? He had the chance to do it on multiple occasions, and he didn't do it. So given all that, has the equity position improved as a result?
I think this very broad-based recovery we're seeing in the market yesterday and today just signals how crucial this question of interest rates has been for every corner of the market. And the Fed is a piece of it, this uncertainty about the risk of rates going higher and uncertainty about what a neutral rate is. I think we got a little bit more clarity about that yesterday. What also happened yesterday was the question about the term premium and the move that we had seen in long end rates since late July. And what we heard is maybe there's a little bit less uncertainty about Treasury issuance going forward, and that the Treasury's listening, and we got a positive surprise with less issuance of long end Treasury, especially 10-year, 30-year bonds. So a little bit less uncertainty in general about the cost of capital means you can have a little bit more conviction about investing, not just in interest rate sensitive stocks, but in cyclical stocks, in fixed income, in asset markets more broadly.
Wow. So this might have been a bit of a game changer in terms of the Treasury issuance. As you said, lower Powell's commentary yesterday. I mean, yields are obviously collapsing over a 2-day period pretty dramatically, which leads people like Jeffrey Gundlach to say that, bonds are the place to be. I want you to listen to what he told me yesterday.
I believe that we've started.
Okay, so as you can see, she's pretty excited. And the reason she's excited is because her and JP Morgan and her equity analyst team at JP Morgan basically came up to the conclusion that, look, these yields are going to have to either materially come down, which is what we're seeing from 4.9 to 4.5, or they're going to have to stay where they are because there's no way they can get higher. What is the catalyst for them to go higher? There's only two main catalysts. Number one, you raise interest rates. If you raise interest rates, then if you can get 6% from, the US government, which means those bond yields have to kind of match to that level or at least be a proxy to that, then that would be a reason for why bond yields go higher and you don't invest in equities. And, that's why equities do worse. Or inflation is still so sticky, or inflation maybe goes up, that you also get have to go into U.S. Treasury bills. That's a better way to gauge your return from the equity markets, because if inflation goes up, interest rates go up, and equities do worse. Both of those narratives seem to be dead. Inflation is not going higher, it seems like, and we'll talk about inflation a little bit more in a second. And bonds and interest rates are not going up. If those two things are done for the end of the year, that is actually setting up for Santa Claus to come to town. Okay. And, I think Santa Claus sees the milk and cookies that we're leaving him. And now he's just wondering how many of the cookies does he really want to eat, right? Because he's a big guy. And he's like, all right, do I want to eat 5 cookies or 6 cookies? And we left him 5,000 cookies. And by 5,000 cookies, I mean 5,000 on the S&P 500. I mean, if we could get there by the end of the year, that would be insane. Probably not going to happen. But the point is, Santa Claus is a little bit more excited now, given he sees that the airwaves are clearing up for him to actually be able to leave the North Pole and go to the moon. And so now we will see, what he chooses to do. But in terms of the conditions being ready for that type of rally to exist, it is there. And we're seeing it right now in the equity markets right now. Let me pull up the charts. I want to just take a look at some of the equities that are up today. And then I also want to talk about a couple of bear cases that we see with some other stocks and the $5 price target guy who said Rishi, who said $5 on Palantir, he reiterated $5 on Palantir. So I wanted to talk about that. The other thing I was going to say is that one of the things Gabriela mentioned in the context of Jerome Powell is that he's likely not going to lower rates anytime soon, because what happened in the 80s with Volcker is that when we lowered rates, inflation came back. And that's the number one thing that he wants to avoid, right? He does not want to lower rates because the market's doing well, and then out of nowhere you get inflation coming back. I mean, that would be pretty bad. So I think as a result of that, we're likely not going to see any lowering of rates soon. But in this market, I mean, with some of the stocks we're seeing it right now in the pre-market, all you need is for the market to just be excited that rates are going to stay the way they are, and I think we'll be in a better level. Palantir right now in the pre-markets, for those that are just joining, had an amazing earnings. I will come out with a video a little bit later today discussing everything I thought about why those earnings were just absolutely incredible. Like, they just knocked it out of the park. The earnings call was one of the best earnings calls I've ever seen in my life, hearing from Karp and company. It was a really, really good call. 1797 in the pre-markets, flat since yesterday, up 20.44% in the day. SoFi 828, up 1% in the pre-market. TFC. This is one I've been very excited about. $30.84. The reason why some of the regional banks are up right now is because Bill Grossman said yesterday that he's buying the banks. And it's just so crazy how, sometimes someone can say something that can trigger the entire market to be excited. Another reason is obviously if interest rates are paused, it seems more likely than not that rates are going to go up. And it is 9:30 a.m. I can't even believe I've lost track of time. It is literally 9:30 a.m. Ladies and gentlemen, the stock market is now open. That's so funny. I thought I had more time to just talk about the charts for a little bit. And then I'm looking at TFC go from 28 to 30. And I'm like, why did it jump like that? So, the market's open. It's 9:30 a.m. We started 10 minutes late today, so I didn't have my usual 10 minutes to do my now. So here we go. Ladies and gentlemen, let's see what happens on this Friday. This might be a fun Friday. We might see some sell-offs, or we might see the market going a little bit higher. Wake your ass up. Stock market is open. Truist, $30.94, opens up 3% on the day. Not bad at all. SoFi, $8.32, up 1.88% on the day. SoFi is finally getting some momentum that they had after earnings. Remember, they were at 684 before earnings. Triple beat. Now they're at 833. This is the type of gain you want to see. Palantir down just a little bit, 1788, down 0.53%, but not bad open for Palantir. Tesla, 222, up 1.68%. PayPal, their earnings were also not bad at all, 1.47%, 55.88. If you listen to the earnings call, Alex Chris just seemed like an absolute rock star in terms of his ability to communicate what they're going to do with the company and how they're going to take it to the next level. So PayPal, not bad at all. Shopify, 59.79. They're up 15% from yesterday. They also had a stellar earnings. I have to pull up their numbers in a bit and go a little bit more deeper, but they beat on revenue. They beat on EPS, and they got the street excited that they know what they're doing and the trajectory that they're on is going to be pretty strong. Palantir, $18. Boom, baby. There you go. $18 for Palantir, breaking 0.41% on the day, 1804. Nvidia, 438, not bad at all. Bitcoin, just below 35,000 at 34,397. But again, it's done with that 27,000 range. So doesn't seem like we're going back to that level. Now we are here at 34,000 on Bitcoin. Enphase, $80. That's not bad either. It's up 1.95%. It's down from 72, 73 on the BAT Solar Edge earnings. So a good macro helps really lift all stocks, even if they're in tough situations. Enphase, not bad. S&P 500, 433 on the S&P 500. Absolutely phenomenal. This S&P 500 was at 410 6 days ago. It's just insane to see that much momentum and see the market get really excited. Square proved out that they are not doing that bad. I mean, I think they brought in $5.69 billion of revenue, way better than what the street expected. Cash App is still growing like a beast, up 13% on the day. It's out of that $42 range that it was stuck in, now at $50. So not bad for Square. Congratulations to shareholders. You're doing decently well. I mean, up 13%. There's not that much more you can ask for Square. Verizon continues to climb at $36.03. The stock was at $30 just a couple days ago, so this one's doing well. Robinhood, $9.64, up 1.71%. Amazon, look at that. When did Amazon get back to 140 basically? Remember when Amazon was at 118? Yeah, Amazon was at 118 October 26th. 6 days later, Amazon now at $139. Not bad at all for Amazon. Google at 129, recovering a little bit from its decline from 140. And then we got Apple here. It's so funny. The entire market is mooning. Entire market is red. And Apple's just stuck there at 174, down 1.5%. That's just, it's tough. It's tough if it's tough if you're Apple. Wow, I'm finally green on some of these options. We got green, folks. I just opened up my Robinhood and we got a little green. Let's see if it lasts. We'll have no idea if it lasts, but we're green. We are green. At least for the day, we are a little bit more green than usual. So market's going up. Market's being a little excited right now. Market's not doing too bad. Spotify at 167, Meta at 313, Google 128, GM and Ford. These guys are all up about 1-2% because they got a deal with the auto workers. And Tesla, again, it was under 200 just for a day, and then it came right back up to $221. Not bad at all. Benny says waiting for the Friday sell-off. On a week where the market does really well, historically, Friday is a sell-off, which it could happen. But on a day like this, where the 10-year came down to 4.5, and this jobs report was as bullish as it was in terms of it wasn't a hot report, you never know. Maybe today people buy stocks. Maybe they're excited. like this stock, Palantir, up 1.63%, $18.29. Again, this is why it's so exciting to be a Palantir shareholder. This is one of those days where you just sit back and you relax and you're like, yep, the stock does what it needs to do. Again, we were talking about it earlier in the market open. It probably doesn't deserve to be up 22%, right? Like you put up the numbers Palantir did. They were good numbers, but they weren't like, oh my goodness, like just the numbers that just blow everyone away. But it's a retail heavy stock. There's a lot of institutional interest. There's 9.57 million shares traded in the first 5 minutes of the market open. People really are excited about this company. And when you've got this external excitement around a company, you're going to give a premium to it, right? Like it's just like in life, when things are a little bit more interesting than other things, even if it doesn't deserve that much attention, it's going to get more attention and it's going to get a little bit more of a run up. And as a result of that, we're seeing Palantir really run up on good earnings, not great earnings, but there's enough excitement where if you're invested in a company where there's that much excitement, you just sit back and let the excitement take off. It's a very similar thing to what happened to Tesla for the past couple of years. Palantir now at 1835. Remember, our high was 1840 last week. So let's see. 1840 is probably a little bit of resistance. If we can break through that, then we might have some more momentum to run on Palantir. TFC breaks $31. Not too bad. $30.97, up 3.34% of the day. Again, the regionals are getting more excited because now if interest rates are staying where they are, then that means there's not going to be more losses on their loan portfolio. And if they start to come down a little bit, then they're going to only be valued. Those losses are going to start not being as high as they were on the loan portfolios of not just regionals, but all banks. And that's why I think we're seeing some momentum here in a lot of different banks that are excited about what Jerome Powell did this week. Pinterest at $31, continuing its momentum. SoFi at $8.30. SoFi again. That's another company that did really well, $2.9 billion in deposits. So the market's excited about that. S&P 500 at 433. Robinhood at 969. They have earnings on November 7th. KRE, this is a regional banking index fund, is up at 43.60. What else do we have? Let's go to the IPOs. ARM at 52.88. So you're profiting on ARM if you bought ARM. And then let's check out Instacart. Instacart 26.85. So Instacart is still down under if you bought Instacart. Look, it's not bad. We got a green market. We got a green market. Ryan says, well, screw my covered calls. Yeah, if you had covered calls on Palantir at like a $18 strike, well, you got the rest of the day, but you never know what ends up happening. Josh says, I don't think the market sells off on Friday. What is the Friday sell-off people always talk about? The reason for that, and I actually do think there's a lot of data to support this, even though I don't have a chart that I can pull up for you, is because people are afraid that some news breaks over Saturday and Sunday and they can't trade during that time, that they sell their stocks and they don't want to open up to a red market. So for example, when the Israel attacks happened on October 7th, that was on a Saturday, people were really scared about their equity portfolios because you just didn't know how the market was going to react to like a geopolitical event like that. So a lot of times, not everybody, but a lot of institutional investors, hedge funds, et cetera, they just get rid of their positions Friday at 3 p.m. and then they'll enter back in on Monday because they're just in it for that little, alpha here and there. And so that's a reason we could expect to see a little bit of a sell-off. But on a day like this, where the macro is just looking phenomenal, I don't know if we're going to get that same type of sell-off that we are all expected to get. Let's talk a little bit about Apple. I think it's important to talk about Apple. This is the one company that's red right now, and we should probably discuss what's going on with them. Apple did well on their earnings, but they didn't do as well as they needed to do. So the biggest problem with Apple is they did like $16 billion in buybacks, right? Like they did a ton of buybacks. They got their EPS to the right place. So over the past 10 years, they bought over $700 billion of stock. So they've definitely bought a lot of their stock back. Revenue $89.5 billion, EPS $1.46. What really crapped the bed for them is this Mac revenue. So the street wanted $8.63 billion. They brought in $7.6 billion. They just didn't bring in enough revenue to make the street excited when it came to that iMac. It just wasn't selling as much as they needed it to sell. And so that one came down. Wearables was down a little bit, 9.32 versus 9.43 billion. And then their China revenue, instead of getting 17 billion, they got 15 billion from China. So when you see something like that happen, the street will definitely feel that Apple is not doing what Apple needs to be doing. I mean, the street's wondering what's going on with demand. Why is this a product problem? Is this a geopolitical problem? Is this a Chinese government problem? Or the iMac's just not as interesting anymore to people? And in my opinion, quite frankly, it would be tough to beat Tim Cook right now because the company's just so damn big. Like the tech giant reported $383 billion in sales for the full fiscal year, and that's down 3% from the prior year. Remember, 2020, they're competing with just an insane environment in 2020 where, the numbers were just ridiculous because everyone was at home. They were ordering new products. For them to be able to try to beat those numbers It's not easy to do. And you kind of got to start to wonder, is this the part of Apple's journey where at a $3 trillion market cap, do they really have what it takes to figure out how to get to the next trillion, the next 3 trillion, the next, could they become that $10 trillion company? I think there's two things that get them there. Either it's the Vision Pro, and we don't know what the Vision Pro is really going to be like. I'm not the most bullish on it, even though I think they're going to sell a crap ton of them. I just don't know how many they're going to sell. Or the car. And the car may happen, the car may not happen, but that's why it's tough for Apple to do what they need to do. And as a result of that, Apple's in a tough position. But that's what you get when you buy a really big tech company. And when you buy a smaller company like Palantir, you get up another 3.85% on the day, because Palantir once again continues to go higher, because Palantir is only a $35 billion company versus Apple, which is more than they're like a $2.5 trillion company. What's going on with Palantir? So 1866, again, I talked about it. I'll have a video coming out later today on my full thoughts, but reason Palantir's up right now, 1865, we just beat the 1840 level we were at 2 weeks ago. So we did just crush through that, which means 19 is next. 19 is next. We'll see if we can get into that $19 level. The reason I think, again, the street is giving it another 4% premium on top of a 20% premium yesterday is because of their go-to-market strategy. The biggest thing I got from that earnings call is the street is expecting Palantir to basically sign a crap number of clients every single quarter. They closed 80 deals last quarter. I mean, they closed a lot of deals. These weren't just like small deals, right? And as a result of that, the street's like, all right, well, if you keep this thing going and that growth continues, we should give you a premium. Now, granted, the street's probably giving them a premium that they could be getting for finally hitting those numbers. So what I think is happening right now is the street's like, all right, we think you're going to hit these numbers. So if you did hit XYZ growth numbers, this is what the price would be. We're going to give you that price right now instead of giving you that price later, because we just want to own the stock right now. S&P 500, they're also, eligible for GAAP because of GAAP profitability, etc. The NHS deal isn't even factored into the price yet, in my opinion. Like when we get the NHS deal, I think we'll see even a little bit more of a bump, even if it gets sold off, because, that's still something that's floating in the air. So there's a lot of catalysts. The Titan contract, which is $1.5 billion over a couple of years that we haven't even gotten yet. There's a lot of things I think the street is looking to in the context of Palantir. And that's why the street's a bit more excited, and that's where we're getting it. Did you see the Pentagon announcement on AI? I didn't see the exact announcement, but from what I understand, I believe the Pentagon is just doing a lot more stuff, right? When it comes to building out infrastructure for AI, hiring more companies to help. If you could put a link in the chat, I'll definitely check it out. But I think it's similar to what Biden's been trying to do around regulating and making sure AI and having partners in the United States that help them with AI. Let's check on SLG real quick. You guys have to look at SLG in the chat. Look at that. SLG up 7% on the day. Yeah, okay, so let's talk about this a little bit. I mean, when we have a day that's this green, followed by a day that was as green as it was yesterday, S&P up at 434. Look, it does get a little like iffy in terms of, all right, this is a lot of green very quickly. Maybe, we need to really think like what's going on. Why is it so green? Should we be concerned? A ton of things come to mind. But from what I'm seeing in the macro, it's not like this green is uncalled for. Like it's not like this green. Truist now at $31.29. Absolutely amazing job for Truist, up 4.45%. It's not like this green is necessarily scary. Palantir at 1870. We've got a 10-year coming down. We've got a macro easing up. We've got interest rates potentially coming down in the next 6-7 months. Definitely not going higher as per Jerome Powell. We've got inflation coming down. And you got money that's been sitting on the sideline for a long time that wants to get back in. And if they want to get back in, then maybe they're realizing, look, we have 2 months left of the year. Maybe they should enter in before 2024. And no one has any idea what's happening in 2024. Maybe we should get a little bit of this market rally going into the end of the year. And so, I don't know, maybe it's not the craziest thing in the world that it's happened. Wall Street thinks they stopped the interest rates. Yeah, and look, Jerome Powell made it very clear on that FOMC meeting that they have the flexibility, the optionality, that's the word he likes to use, of raising again, which of course he does. But I mean, if Wall Street doesn't believe that they're going to raise again, then Wall Street's not going to care, right? Wall Street's just going to be excited to continue to see this market do a little bit better. And Wall Street wants the market to do good, right? We were doing so good in the year, and then, things happen. I think Wall Street wants a little bit of momentum, because we deserve a little bit of momentum, because the market earnings were good. Here's the other thing I want to say. Q3 earnings were phenomenal. I mean, Palantir is just one of many companies that had an amazing earnings. There's only like 3 or 4 companies that actually crap the bed on earnings. And when I mean crap the bed, they didn't like really crap the bed. They just missed on a couple things. Maybe you didn't want to miss on certain numbers and they missed on those. But every company and I've covered pretty much all of them, or at least I've looked at their numbers, they did well. This wasn't a bad earnings. And the reason they did well is because the consumer was strong. The geopolitical environment allowed them the flexibility to do what they need to do. So, for example, right, even though the Russia-Ukraine stuff is going on in 2022, oil companies weren't really doing the best because there's a lot of supply chain bottlenecks, blah, 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 right? A lot of those things have cleared up. A lot of these things have been resolved. Even though there's wars going on across the world, it's not necessarily impending these companies' performances. In fact, it might be helping some of those companies in terms of them being able to provide services. So companies did well in Q3. We had expectations. I think companies more than exceeded a lot of those expectations. I mean, for goodness sakes, Google and Microsoft did absolutely incredible. Google missed by $20 million on one metric, and the street got mad at them. Like, if that's why the street's getting mad at you, then that's not a reason for Q3 earnings to be bad. Netflix brought in 9 million subscribers. How the hell did they find 9 million people that like Wednesday or Squid Game? I don't know how they found those people, but they found those people and somehow got them to subscribe, which means, again, Netflix had to pay for advertising. Those people had to ultimately take out their credit card and subscribe to the service. Like, so many things had to happen within the economic infrastructure of our global society for these companies to have these levels of earnings, but they were able to do it. And that's why we're seeing the momentum we're seeing today as well, which I don't know if it has to necessarily die off. What's the catalyst for these companies or for the market to sell off over the next month? I don't really know. It doesn't seem like there's that big of a catalyst because inflation seems to be coming down and interest rates would probably be paused. Enphase and SolarEdge got destroyed. Yeah, but those are more cyclical, right? Those are such outliers to me. Those are not really a telltale of the market because it's solar. And, if McDonald's got destroyed, then I'd be concerned. Because McDonald's is like, everyone eats McDonald's. So like, why is McDonald's not doing well, right? Like, are people really struggling? They can't buy a Happy Meal. But Enphase and SolarEdge getting destroyed is just a bad stock pick. And, there were people that said that Enphase and SolarEdge would be like great companies this year. They're down 72% year to date, at least Enphase, primarily off the fact that interest rates really hurt them. And they might come back quicker than ever when interest rates go back down. But it's just a question of like allocating your resources at a time where interest rates are tough. The regionals are also not the best for interest rates either, right? But the problem is, see, here's the difference between TFC and Enphase. And this is why it's so funny. I love Vitaly and I love Carlos on Finance Junkies, but they were making fun of me and Chris for getting into TFC over Enphase. And, they were like, why do you want to be in a bank over Enphase, which is this high growth solar edge company, blah, blah, blah. The reason, and this is all credit to Chris, this is no credit to me, is TFC is susceptible to interest rates because it's a bank, right? Banks don't do the best when interest rates are high. But TFC is already down 30% year to date. And that's the difference. And that's where Chris saw a lot of wisdom that I personally didn't see, right? And that's where he was able to make the analysis. Enphase was at 180 at the time where we were buying TFC. And Enphase was susceptible to a lot of downside if interest rates were bad. TFC had fallen to $27 from 62. And so when you see a company that's already so depressed that it kind of has nowhere to go but up, even though interest rates going higher, which they did go higher, another 50 basis points, wasn't good for TFC, it definitely is something they can recover from if the fundamentals of the business are in place. And a company like TFC, Zions, KeyBank, all these other regionals, a lot of their fundamentals were in place. And so they just needed to survive until we got to this point, which was a pause, which is why you see the stock up 3.29% of the day. And eventually when we get a cut, the stock will be even better. So that was kind of the analysis on picking different stocks that are actually receptible to dealing with some of these interest rates. In California, people won't be able to buy a Happy Meal anytime soon. Gavin Newsom is raising fast food restaurant worker wages to $20 an hour. Yeah, I saw that the other day. That's, look, I guess California, your burgers are about to get more expensive. That's all I could say. That is a lot. I'm not $20 an hour is a decent amount for fast food. But look, that's your state. You guys voted for him and guys got to deal with it. If that's what he wants, that's what he wants. I guess that is what it is. Palantir 1871 breaking through that 18. We got to 1881, so that's where we topped out at. We broke through 1840, which was the previous resistance. Now at 1871. If you're just joining, I would love to know in the chat what you thought of Palantir earnings and if you sold any of your shares. And you can be honest if you sold any of your shares, but what did you think of earnings? You can give me 1 or 2 sentences. And did you end up selling any of your shares? Look at that. Palantir at 1880. Just absolute. Look at that. 1884. 1884. We are 16 cents away from $19 on Palantir. Just absolutely incredible. Not bad at all. Let me take a screenshot of this one. This one's got to go on the Twitter sphere. Oh my goodness. Beautiful, beautiful price action. And again, like on those earnings, this is one of those companies where on the right earnings, it deserves this premium. It just deserves this run up. Will it last? No one knows. But does it deserve it? Yes. Those numbers yesterday were not to the point where it doesn't deserve this type of a premium. Palantir up 5%, following up 20% yesterday. This is just incredible. Absolutely. Following up 20% yesterday. Let me get to the comments in a second. Let's post this. So it's up 25% in the past couple of days. Look at that. It's liking 19. It wants to get to 19. It wants to get there. It wants to get there. Zocol says I didn't vote for him. Well, more people did. Scott, what's up, man? I met Scott at Vegas. Scott, I was so happy to see you at Vegas. I hope you're doing well, brother. I know your Palantir position is doing well. Scott has like an $8 average, so he showed me his position. Scott, I hope you're doing well. What are people saying? Would be awesome if they announced the NHS deal today. Hope soon and not weeks away. I think they will. I think they're just trying to figure out the marketing around it, so eventually they will. Some people said they sold some covered calls. I remember buying the Palantir DPO. Operating expenses down 5% year over year. Gross profit up 21%. AIP traction 2030 gang. Maybe we need to get a shirt that says 2030 gang on Palantir. Look at that. 1891. 9 cents. 9 cents. 10 cents away from that coveted. Now, could you imagine if 19 becomes the floor on Palantir? Like we stay at 19 for the next month, and it's like that's just it. It's stuck at 19, and now if you want to buy in, you got to buy it at $19. And again, I think we're seeing, we got to see the growth numbers, but what we're seeing on AIP is like the growth potential is there, and now we just have to see them actually execute. But the growth potential definitely looks like it's there, and we'll see if they can pull it off. But I think that's what's got the street excited. Now, granted, $40 billion market cap. People could argue it's a little bit expensive right now. It's a high run up after 25% on 2 days. When the stock's up that much, you don't want to buy. So the people that are buying right now, hopefully, is no one in the chat. We know better than to buy on a day when the stock's up 25%. I mean, you could buy it if you want, but we know better. If you're part of this market open, we know better. Like this is one of those days where you let the FOMO people on stock twits buy. Let them buy. We get to relax. We get to see our gains and just bask in the glory of knowing we were earlier than other people. So that's important. Ben Wilkinson says, thank me for the run. I sold yesterday, so obviously it'll run up. Look, it is what it is. You probably got some good profits, Ben, at 16 or 17, wherever you sold. But my thing about selling yesterday was there was just no reason. Like, outside of wanting to take profits, nothing in that earnings call said to sell. Nothing. Absolutely nothing. Nothing Carp said, nothing. There was no red flags at all. I mean, I can't find a red flag. I mean, billings went down a little bit. The net dollar retention went down. But all of those things will be solved as AIP scales. And again, this comes down to fundamental due diligence. Do you believe in LLMs? Do you believe in AI infrastructure for an enterprise? Do you believe in governance of data? Do you believe that a company has to actually build these products, not just buy companies to be able to build these products? Like, do you believe in that stuff? And we've been talking about that on the channel for like 7 months since AIP came out in April. And so that's why I think hopefully the channel has been a little bit valuable because we've been really talking about that stuff. And if you cared about that stuff, then you wouldn't sell because you would have realized like that's why Palantir is up right now. It deserves to be getting that premium because all that stuff made sense. All right, we got 1 cent left to 19, folks. Come on, baby. There we go. There we go. $19 on Palantir, up 6%, 1905. 19 wasn't good enough. They had to give us those extra 5 cents. Let's see if we get to stay at that level or if we sell off a little bit. $19, not bad, man. We haven't seen 19 since August. Haven't seen 19 since August. We are back. 19 is here. I'm trying to think of like what you do when you're age 19. And it's just, I don't know. 19 is one of those years where like, it's just 19. It's not that exciting. But we're 19 years old, folks. We're Palantir's growing up right in front of our eyes. Anushman, thank you for the 449. I don't know what currency that is, super chat, but thank you for this. Till what price is it good to keep adding Palantir? Super thanks for the community. Okay, it's a good question. I think, I still think 15 and below, and I've been very public about that for the past really like 5 months, is my price target on buying Palantir. I still don't like buying above 15. I can understand buying at 16, but I wouldn't be super like excited to do that, right? Because it's a green day. We're high on green euphoria, but if you're part of this market open, you know that on the green, as much as we love the green, the red is there, and the red can come back. So it's one thing to be super excited and have fun and ring the cowbell when we get to 19, but we also have to remember the downside is always there because every stock has to come down as much as it goes up, and eventually we just hope it's higher than it is lower over the long term. So I wouldn't rush to buy. Like, this is not the day to buy. Up almost 30% in 2 days. This is not the day to buy. I like 15 and below. 16 is not crazy to me, but 15 and below. And really, the answer to your question depends on price action over the next month. By the end of December or by the end of November, where are we? Are we at 18? Are we at 17? Are we at 14? Are we at 6? Are we at 22? Right? Like, where does this price end up capitulating at? And that will determine kind of what's the new floor, what's the new base for how you want to think about entering into your position. And so we will see from there. Palantir is my biggest position. I'll admit I still don't truly understand what they do. I couldn't explain it easy like I could explain Amazon or Tesla. I just like it because it's data analytics. It's funny because I would agree with that like a year ago. I actually think I can explain what Palantir does. And I know that's really cocky, but it's just when you study a company every day, like I really do think I can explain what they do. Maybe not at the most granular of levels, but like I've literally studied their white papers because I told you guys I'm like working with LLMs on the side. I'm playing around with some side projects. I'm learning a lot about AIP and LLMs and what, like, for example, like I can go off on a tangent around what are vector databases and embeddings. Right? Like this is stuff people probably haven't heard about. And this is, I think every Palantir investor needs to know, what is a vector database? How does the data enter the vector database? How is it then embedded via a large language model API, like an OpenAI's API? And then how does that embedding combined with that vector database then create the potential results and communication that a chatbot and LLM can have with an end user? Like I've literally learned all this stuff in the past 2 weeks just because I've been experimenting with this. And this is exactly what AIP is doing. So, and it's doing it at a very high level. So I think I have a really good understanding of what the hell these guys are doing, enough to feel more excited in my investment in Palantir. And I should do a video on this and just, start talking a little bit more about, how I think about AI and LLMs, because this is the future for the company. AIP really is the future. But yeah, it's just like, and this is why I feel excited about the investment, because I think I can explain them a lot more than I can explain other companies. We're struggling at that $19 range, $18.99, $19. We'll see if we get there. Amit, keep a close eye on Pinecone. See, Jay Schwash in the chat, he actually works in the tech industry. And so he knows a lot of these companies. I know what Pinecone is now that you mentioned them. I was using Pinecone 2 days ago. So this is why I feel like I'm getting a lot more excited around just my own personal investment in Palantir, because on the technical side, I'm actually diving deeper into all these players. So when you mentioned keeping a close eye on Pinecone, I was literally using them 2 days ago to set up my workflow. So like, yeah, this is, I think maybe I need to do a video on this and get more people educated on it, because it is a little more complex stuff, even though it's not as complex. But my point is, once you start to go deeper around the products they're building, you start to have the confidence of an Alex Karp, because the confidence of an Alex Karp comes from the fact that he thinks we're building shit that really no one else is able to build at the level we're building it. We have the best engineers in the world. Their average revenue per employee went from 292,000 3 years ago to 588,000. Doubling in terms of the productivity of their employees and the revenue they generate for the company. And so he's excited and has confidence. I think as a Palantir investor, if you actually know about the tech that they're building, your level of confidence becomes even stronger in terms of the investment thesis. Are you planning to get a Palantir certification at some point? No, not a Palantir certification. Let's just say I have some ideas. Okay. Let's just say that. And I was playing around with some ideas, and let's just say I was working on something that I think you guys will all really like, and it might come out in 2024. And it's a side thing. It takes like, a couple hours a week on my end as I'm looking towards it, but I think you guys will really like it. And I'm playing around with it. And so that's why I'm learning a lot more about LLMs. but it's exciting to learn about this stuff because you just never know, how much more you could dive into this rabbit hole. What's the name of the Palantir book? Is that 0 to 1? Yeah, 0 to 1 is a great book for Palantir. It's Peter Thiel, the co-founder of Palantir, gives you a good understanding of how they think about competition, etc., and what's going on. What else do we have? What else do we have? We got Mateo here. The people are not ready for said side project. Oh man, the cat's out of the bag. I'm working on something a little bit on the side. It's going to come out January 2024. And Mateo knows about it. Mateo, one of my good friends in the chat, he understands what we're working on. Yeah, look, I think you guys will be excited for it when it comes out. I think you guys will be really. I think you guys will enjoy it. I think it'll be one of those things you guys really want to see. TFC calls are up, baby. We're up. They're finally up. I mean, they were underwater over the past couple of days. My portfolio is doing pretty nicely today. It's not too bad. It's been a rough couple of weeks for the portfolio, as it is for a lot of people. Remember that nasty red day we saw a couple of days ago? It was like a couple of weeks ago. It was pretty tough. All of us were down like 10, 15,000 on the day. So this is one of those needed days that people should be excited for. Palantir 1894, not bad at all. Still in that $18.90 to $19 range. We hit 1906 at the top. Now at 1894. Mark got it correct. My new side project is called How to Be a Virgin in One Step. That is correct, Mark. I don't know how you figured it out, but you figured it out. It is How to Be a Virgin in One Step. It will be coming out January 2024. No, I'm just kidding. I mean, or am I kidding? Bike Pink, thank you for the €20 or pound super chat. Thank you for all the efforts to keep us informed amid. Have been watching and listening since the start of your channel. Have just passed the threshold with my Palantir investment. So here's your cut. Keep it up. Thank you so much, Bike Pimp. I appreciate you. I know you from the chat. I remember your name. Who could not forget the name of a guy who pimps out bikes? So I appreciate the $20 or £20 or €20, whatever the hell it is, super chat. Why don't we just have a universal currency? Why can't we just have a universal currency so I don't have to fumble on my words? And because your super chat is orange, maybe that is the bull case for Bitcoin. Maybe we just need a universal currency. I know Philip Rizzo in the chat is just like so annoyed right now because I'm so bullish on Bitcoin now. Yep, Bitcoin. There we go. It's Bitcoin. Not bad. Not bad at all. Thank you for the super chat. Amit, are you taking profits? No. 2030, baby. 2030. 20 freaking 30. And I say 2030 because it's more of a mindset. And no, I really believe in that. 2030 is a mindset. And what is this mindset? The mindset is, and I'm just going to flip through some other stocks while I'm talking. The reason 2030 is a mindset is not because it's not like I'm being arrogant or stubborn that I don't want to sell Palantir until 2030. It's more so true investing is not options. True investing is not day-to-day interswing movements. True investing is not day trading. Maybe it is for people who are much more smarter than me. True investing is finding a company and just letting it play out. Letting that narrative happen. Like, could you imagine if I have 5,000 shares, 10,000 shares by 2030, and those shares are at an average of, let's say I average up and we're at $30 a share, right? That's the average. And the stock's at 200. 5,000 times 200 is $1 million that I paid 150,000 for. If you do $30 times 5,000. That's a hell of a return. And I don't think you can get that return in options. I mean, 150 to 1 million, you don't get that in options, right? So especially not with the level of potential security that you would get there. So it's one of those things where it's like, dude, if I believe in this company, I believe in this company, and I want to believe and just give them the time to let it play out. And if I'm gonna believe in them, then I'm gonna have to really give them the time. Now, if it goes to $50 tomorrow, that's stupid, right? And like that's where it's like anyone would sell if it goes from 18 to 15 tomorrow. But in general, you give them time. You let it play out, let the narrative happen, and then keep going from there. And keep it up. Big money is not in the buying, it is in the sitting. Well, that is probably well, we'll see. I mean, maybe big money comes in a little bit more after a while. After S&P inclusion, $25 is the floor. Yeah, that could actually happen in 2020 as well, but S&P 500. Look, I mean, I don't know what the floor becomes after S&P 500 inclusion, but if it does happen, then we're going to have some momentum. If it doesn't, then, we'll see where it goes from there, but we will see. Hey, Amit, what's going on with Aldia? That is my startup. That is what I work on every single day, right? So YouTube is Finance Junkies, 1 hour in the morning, morning open stream there. And the next 8 hours is Aldia. And that's another reason why I'm long-term, because when you're building a startup and you're actually trying to just fucking work your ass off and build something all day, you also have to be long-term. And that's, that's another reason I relate to Carp, right? Like my startup is not as successful as a Palantir by any sense of the imagination, but it's 10 hours every day. Like, you guys want to know why the reason I was late to the market open today? Why I woke up at 8:50 versus like 8 versus like 7 a.m. and I get ready like normal. It's because I was working on my startup all night. And Mateo and me were texting. He has my text from 3 a.m. while I was texting him on Twitter about my startup. And so when you're up till 3 a.m., 4 a.m. working, and then you sleep, and then you got to get up to do this market open that I love, that I wouldn't miss for anything in the world. That's what ends up happening. You end up starting at 10 minutes late because you were up working, right? And so, but that's another thing where I relate to Carp is like Carp has been working his ass off for 20 years. The least I could give him is the benefit of the doubt and give him some time to execute his vision, right? Because I know what it feels like to execute a vision. I know how hard it is. I know how crazy it is to try to sleep at 4 a.m. and then manage a market open because you just got to juggle all these types of things. And then as soon as this market open ends, you go right back to that same work. But you got to give yourself time, because if investors believe in you and they give you the chance to do something, then you got to give yourself the opportunity to do it. And I think the same thing with Palantir and Carp doing what he needs to do. Thoughts on Tevis pulling out of Palantir? Yeah, that was stupid. That was dumb. You can tell him I said that too. That was dumb. I don't know what to tell you on that, but that was just a stupid thing to do. But he did what he did. Again, if you're selling Palantir for a bank, you're not really that. That's just dumb. I'm sorry. Selling Palantir for a bank is dumb. Like when we're looking at the broader scheme of things, yeah, that's not a good idea in my opinion. But he did what he had to do, and so wish him nothing but the best with his with his Palantir sell. Tevis sold. He made a video on his channel. By the way, guys, I'm not going to be on SoFi Weekly anymore. Not doing that podcast anymore. I thought about it over the past couple of weeks, and I just don't have time to do the SoFi Weekly podcast anymore. It's getting a little bit ridiculous in terms of my schedule. So that hour every Friday is I just can't do it anymore. Especially, obviously, you guys hear me talking about I'm up till 4 a.m. working on the startup. It's just really hard to do another podcast. So I'm not going to be on the SoFi podcast anymore. I'm still bullish SoFi. I still tweet about them, still talk about them, but I won't be on the podcast tonight. But the other guys do a great job and they'll be on that podcast, and you can ask them in the chat, hey, Tevis, why did you sell your Palantir for SoFi? You can ask them the question. Mick going to sell SoFi now, conviction going to tank. No, my SoFi conviction is there. I just, honestly, my channel's not even SoFi related. So I was doing the podcast every week, just from a content perspective also, it's like, it's not worth it on my channel. No one cares about that podcast, at least on my channel. Right. So, yeah. I mean, the other guys cover SoFi really well. They can do the podcast, but I will be continuing to cover Palantir. And also with Finance Junkies, we do that 5 times a week. It's just really hard to do another podcast as well, right? Philip is like, smart, buy Bitcoin, forget SoFi. It doesn't matter. Okay, what else do we have going on? But again, the point I was trying to make is when you're a founder and you're working your ass off, you have an utmost respect for other founders working their ass off, which is Carp to me. Carp yesterday was speaking like a freaking founder. He was speaking like David who wants to, beat Goliath. He was speaking with conviction, arrogance. He convinced 4,000 people to work for his company to buy into his mission, and now they're executing. One of the guys, Ted Marbury, on LinkedIn said, now we hit a $1 billion run rate on U.S. commercial. We can't wait. Or he said, it doesn't seem as daunting to hit a $10 billion run rate on U.S. commercial. Right. So you got people thinking now in the tens of billions versus ones of billions because they finally got through the $1 billion run rate. And you've got that culture within management just being excited for what the future holds. And I want to be a part of that, which is why 2030 is the mindset, right? That's why 2030 is exciting to me. Like that, I want to hold myself accountable to 2030 because I'm seeing management kind of do what they have to do. I just sent you £1 to your share in Bitcoin on Cash App. Goodness gracious. This guy. Yep. Philip Rizzo did indeed send it to me. I have to. I thank you, Philip Rizzo, there you go. We're here. Where is it? Right here. Let me show this. We got the Bitcoin from Philip Rizzo. Thank you, Philip. I appreciate it. This one is, I guess I'll hold it to the moon. I'll hold this Bitcoin to 100 grand and we'll see what happens from there. Okay, so what else do we have going on here? So Palantir 1894. I don't know. It seems like we're stuck in this 1890 range. We hit 19 for a little bit. Now we'll see. Does the market sell it or does it not? 35 million shares have been sold of Palantir. So we see some very strong momentum there. Let's do a little bit more of a run. TFC 3106, Enphase 82, KRE 43, Netflix 428, Square 49, continuing its rally, 13% up on the day. PayPal up 1.3%, Tesla 224, Shopify 60. Palantir 1885, S&P 500 434, Robinhood 961, Google 129, Verizon 36, Amazon 138, Disney at 84. Disney's up. They bought Hulu for $6.8 billion yesterday, so not bad at all for Disney. and Meta at 312 as well. Not bad, folks. Not bad at all. Palantir 1885, up 4.9% on the day. All right, I think that's it. If you have the time, I think a video on Black Sky would be a great idea. Geospatial intelligence. So it's funny, Erwin, I did a video on them. If you type in let me just type it in and let me get it for you. Google Earth on steroids. This is crazy, bro. I remember the name of a video from 2 years ago. Google Earth on steroids, Black Sky. I did a video on them a while ago. Yep, I'll link it in the chat. Here it is. This is the fun stuff of covering Palantir for 2 years, bro. I've like covered damn near everything, just damn near everything. So you can check out that video. Maybe it's time for an update on that video. I don't think they have any more Black Sky shares. They might, but they were using Black Sky with the Ukraine-Russia crisis in terms of their geospatial intelligence. Not sure what they're using now to fuel some of that data, but it could be Black Sky. It could be something else as well. Okay, that is it for me. More up to date. Yeah. Let me do it. Yeah, I should do another one more up to date as well. All right, folks, that's it for me. Thank you, everybody, for being here. This was an exciting week for Palantir shareholders. I will have another video in about 4 or 5 hours coming through on what happened with Palantir earnings. This is the first Palantir daily I've done in like 7 days. I can't believe I missed 7 days, but with everything that just happened, it ended up happening that way. So we're gonna come out with that video, discuss earnings, go more in depth on what happened, and it's just a great earnings for shareholders. Real big congrats to shareholders. You guys deserve it. We all deserve it being part of this journey. We'll see what the stock does. Maybe it goes up, maybe it goes down, maybe it continues to do what it does. But regardless of the stock, the company is in the right direction, and that's what matters. Last thing we'll do is the word of the day, and then we will end it out. Dan Ives is on CNBC defending Apple. Oh yeah, Dan Ives can't say they're the Messi of anything today. All he had to do is one tweet for Palantir. He needs a lot of defending for Apple because he's got to defend that 240 price target, which I think they'll get there. But Apple's in a little bit of a tougher situation. Okay, it's Curmudgeon.
Curmudgeon.
Dude, that was the worst. That was the most epic fail on the word of the day. I said it's Curmudgeon, and then it's
Curmudgeon.
Curmudgeon is a bad-tempered, difficult, cantankerous person.
Curmudgeon.
So if you are yeah, I mean, like, I don't think any of us are curmudgeons today with Palantir. I mean, shit, 70 AIP boot camps in a month, 17% year-over-year revenue growth, carb banging the table out of excitement, freaking 45% year-over-year customer growth. It's hard to be a curmudgeon when you see some of those earnings. This is a good one. We can definitely use this word. If someone, like, if your significant other is just being annoying, you can just look at it like, babe, can you stop being a curmudgeon right now? And she'll look at you like, what the fuck? And you're like, yeah, can you just like chill out with the curmudgeonness? Okay, babe. So if you have a significant other, this is when they're being annoying, curmudgeon. Tell them to stop being so bad-tempered. That's the word. You curmudgeon the crap out of that one. Yep, I did. All right, everybody. That's it for me. I will see you guys. Might do a little bit of a Saturday night stream. I said we were going to start doing those. Maybe we'll have time this weekend, but I will see you Monday morning, no matter what, for the market open. Went through hell this week with Vegas, the flights, all that stuff. We did not miss the market open because this market open, I think I realized that this week, it's becoming a big part of my life. Like, it's one of those things where I need to do, just like working out is one. And you know, we all know the universal truth, right? That like a routine leads to a lot of happiness, like brushing your teeth every day, drinking your coffee at the same time. Like, all of that stuff leads to a level of a little bit more happiness than normal. Even if it's silly things you have to do in your routine, but it keeps you grounded. This market open is a routine now. It is everything. And it makes it better that people want to show up and join and get some value out of it. But dude, this is like, I think you guys know my history with public speaking and debate. I've spoken on stages in front of thousands of people for the far majority of my life, right? Really for 5-6 years in competitive debate. That ended when I stopped debate because I moved on to college. And every morning it's like I'm back on that stage. And I'm just so grateful that people are here to like see me perform on that stage. And I get to make sense of something I love, that I'm a junkie for, which is the stock market. Get to inject a little bit of humor, a little bit of my own stuff, and get to analyze the news. And I fucking love it, bro. Like, and it's not for the money, because these streams maybe make $20 when it's all said and done, right? When the ad revenue is caught up. So it's not about the money. It's about the process of being in front of people and making an argument and getting people to believe in what you want to convince them of, and hopefully explain in regards to the markets. And it's just the coolest thing in the world. And so it's become part of my soul. It's become part of me. I just don't see myself ever stopping. I just see myself going and going and going no matter what happens because it's fun. It's like really, really fun. And it's exciting every single day to do this and to push yourself through the toughest of days when you like today when I woke up and I'm god awful tired because I slept at like 4 a.m. You know, there's a part of me that's like, I really don't want to just get up and become a performer. And then you log on and you're like, it's time to perform. It's time to do it. It's time to get to work. People actually care. So give the people what they want and do what they got to do and get better every single day because you got to get better every single day. Zoe Colt says, my son was in a curmudgeon yesterday after I told him to wash the dishes. I love it. Thank you, everybody. It's great. We will see you on Monday morning, and I'll have a video talking about Palantir earnings in a couple of hours. You said, where do I get these handbands from? These are from my sister. It's on an Indian holiday called Rocky. Your sister gives you it's called a Rocky. They tie this on you and they wish for you good luck, and then you give them a gift. So I've had these on for the past couple months from my sister. All right. That's it. Have a great Friday. Have a great weekend. Go out to dinner. Have some fun with some friends. Go take a walk outside. It's getting cold in New Jersey. Do what you got to do. I'll be here. I'll be working and I'll be prepared, ready to go 8:45 a.m. Monday to continue to open up the market. Thank you, everybody. Have a great, great weekend. And thank you so much for showing up this entire week, even though I know the market open was kind of crazy. I will see you guys on Monday. Have a good one. Good night, everybody.